Everyone, Scott Redler, T3 Live. First of all, I hope everyone that's watching this is out of harm's way and your family is safe and in some kind of dry quarters. It's been definitely a complicated week for everyone in the Northeast and around the world, even just watching it. I'm sure it's not easy. As far as T3 Live, we've been doing everything we can in order to keep you guys in as much with as much content and as much support as possible. And every day we move forward, we're closer to just having everything at your disposal. And sooner or later, our studio will be up and running, and the morning call in the studio with our affiliates from the street and from Forbes and from everywhere else that come in there will be back on track, and life will be as normal as possible. But it's pretty normal as it is. As far as the markets are concerned, we've been trading this really tight range. Last Thursday, we tried to break above 1420 in the SPX. I tweeted about it. I tried to be tweet as much as I can because I feel like a lot of people follow me there, and sometimes if I can't type in right into the virtual trade floor, it's a good way for you guys just to, see my thoughts, so it could help guide you in with whatever you are trading. So we broke above that on Friday. 142 was a decent level to buy the spiders, or at least a spot to cover your shorts. And then on the jobs information on Friday, you had some excitement. You had a gap up. Kind of talked about on Twitter. I'm like, if you didn't buy 142 spiders, I would think twice about buying 143.5, 143.75. And then lo and behold, as the day progressed, spiders went from gapping up to trading through Thursday's highs to going negative to giving back more than 50% of that gain, and it turned back into market wasn't ready to break out or get in motion, and I don't even know if it really knows what direction it wants to go, especially considering the election is tomorrow. So with that said, if you've been watching CNBC, you've been hearing all over the board everyone saying how they're handicapping a Romney win or an Obama win. And then my friend Bob Pisani, who I talk with all the time on IM, was talking about the problems if we have no winner. So those are the three scenarios. I think as long as we wake up Wednesday morning with a president, the market should be up. How long that lasts, and then we start going into particulars about who wins and what goes on from there. But if we don't have a president and we go through the recounting and the mobilization of the litigation teams, which are already saying they're in motion, it could become a disaster, which we traded through a while back. I think last time we didn't have a president, it took a few weeks and we traded 7 to 8% to the downside. So with that said, we know at least that 1404 to 1407 is the recent support. That's the recent floor in the SPX, and then spiders, it's been between 140.30 and 140.70. That was the level that held today. You had some nice downside follow through in the morning. Then that support held, and then things started to get some traction. So all in all, I'm still in a very tactical approach. 1474 was the high of the market. That was when the oscillator screened plus 60. Since then, it's been a very grindy pause type trade where even if you try and press shorts, it hurts you a little bit. You try to add to longs, it hasn't been rewarding. I'm sorry about the sounds in the background. Anyway, let me just take a little drink of water because it's been a long week, long day. So at this point, I still think the jury's out, and it's a very mixed bag. Financials are still hanging around, so the XLF is still holding higher. That's considered a strong group. We need to see if that continues. The home builders, XHB, still holding above, just say that 26 breakout area. Today, retail finally bounced off its 100-day. So I'm sorry I can't show you charts, which is what I usually do, but I'm just going to talk to you about it so you have to look at my tired-looking face. So retail, at least we have a new point of reference there. As far as Apple's concerned, we know that, sorry. I'm in someone else's office, and I'm telling them to shush. That's not very nice of me. Sorry. Anyway, real time, transparent. There you go. So what was I about to say? Apple. So Apple, has been just one of those trades where, everyone gets very emotional. And I feel like, a few weeks back, we tried talking about how, we had a lot of success with it as a swing trade after the earnings 2 quarters ago when it filled the gap, traded above 600 and followed the 8 and 21 day. And then when it broke the 21 day, that was my out. And that was when I said, okay, I'm going to go back to a 2-way trade. And then from then, it went from 680 actually, And every moving average, it held it for about a day and a half or maybe even 3 days, and then reversed. You could have made some money at the key moving average, and then you could have made money shorted. But overall, every time it closed below the moving average, it continued to the downside. And then finally on Friday, I know I tweeted last, I think Wednesday, I got back long around 591, sold some around 600, tried to trail it, and then Friday I just felt like it was very weak. Friday it was not even dancing off the 200-day. It was actually down before the jobs number came out, and it got dragged up. So I tried to tweet out there saying, like, if you're stuck in this thing, take Apple out of the name and get less emotional about it and trade it the way you would if it was some other stock that was showing relative weakness, that's been heavy, that's not been holding key moving averages, that's been more of a sell. So anyway, lo and behold, today, a lot of us were looking for that reversal trade. News came out around 8:20. Come on, Ruben. Shh. You've heard that before. If you watch the video, that's usually Sperling, yelling at Ruben. But anyway, so with that said, Apple is down $3. Went up like 5 or 6. The news that they sold 3 million iPads, gave it a boost. I still think that has work to do. I do think that, I went back long and long it overnight. I'm not exactly sure. I like the risk reward. It wasn't a powerful reversal today. It wasn't filled with volume and a lot of energy, but it's worth a try. The key is going to be for it to get above 591. My rule with 200-day moving averages, if it breaks it and then reclaims it within 2 days or 3 days, it's more of a trap. It's a way to clean out stops or institutions to steal stock. And then if it goes back above it and holds above it, you caught yourself a nice trade, because I don't think anyone in the T3 Live community used Friday to finally sell their stock after a 100-point move to the downside. You had the 21-day, you had the 50-day, you had the 100-day. If you waited the 200-day, then I'm not teaching you anything, and I need to do a better job. But anyway, so that's that with Apple. Tech's mixed. Google gave you a day and a half trade Thursday into Friday, and then it sold off, and then today it was down $12 before holding. It's it's still in a holding pattern. Amazon's kind of holding pattern. I think Netflix is acting better ever since Courageous Call came in there, and took a stake. It's opened down the last few days, and it's been viable. Guys have been making money from negative to positive there. I'm actually long a little bit of that. I like the flag type pattern. I think above 79.85, and you can see more motion to the upside there. Bank of America had a nice breakout on Thursday into Friday. You could have trimmed some, held some. There's a lot of that going on. So with that said, it's been a somewhat frustrating / lethargic type tape. And when that's happening, there's nothing you can do about it. The only thing you can do is control your little fingers and not add on strength, and not try and press shorts on support, because anyone looking for momentum both ways is getting frustrated, and it's been hard to find. So at this particular point, we'll see how we open tomorrow. We have our lower defined range. There are some things acting better than others, but it's really been a tactical trade, just like IBM. Nice trade to the short side after earnings, and then back from 190 to retest the 200-day was a trade, and now it's trying to regroup again. So there's a way to tactically make money without being in harm's way. So right now, on a macro basis, I think if you're a macro investor, take your long-term plan, stay with it, just be in tier 1. If you're an intermediate term trader like me, who was in portfolio approach in the first quarter and had success, or in August into September, I think right now is still the time to be tactical, not putting on 10, 12 positions with the hedge. I just don't think the market is ready for that. And when it is, I'll let you know. At this particular point, again, tactical, don't give back money, take what you can get. And then, I think after, Tuesday coming to Wednesday, we'll have more clarity. Hopefully we'll have a president elected. I'm not going to tell you who I want. You can make your own guess on that. And then we'll move from there. So again, every small step gets you to firmer footing. Hopefully, you're in a safe, dry place and your family's doing all right. And it's been a pretty complicated week, but bad times do lead into good times. And I will see you tomorrow morning. Have a good night.